The U.S. Federal Reserve is taking an important first step toward winding down its massive stimulus program. The Fed is keeping its key interest rate steady for now, but hinted at another hike before the year is up. Yoo Jun-hee looks beyond the numbers.
Following the end of its two-day meeting on Wednesday, the Federal Reserve announced it will begin to roll off its $4.5 trillion balance sheet starting in October. It was a widely expected move from the Fed, which had long hinted at scaling back its massive bond holdings with a view the U.S. economy has fully recovered from the Great Recession. The Fed will reduce its balance sheet by $10 billion a month initially, gradually upping the pace after each quarter until it reaches $50 billion every month, promising to move cautiously so as to avoid unsettling the markets.
We also decided that in October, we will begin the balance sheet normalization program that we outlined in June. This program will reduce our securities holdings in a gradual and predictable manner.
The Fed also kept its benchmark interest rate steady at its current range of 1 to 1.25%, while hinting at one more hike before the end of the year. Fed Chair Janet Yellen said the move was merited by healthy signs of economic recovery, with the central bank expecting the U.S. economy to continue growing at a moderate pace over the next few years. However, low inflation remains a concern, with Yellen admitting the Fed does not fully understand why price growth hasn't picked up pace, still well short of the central bank's 2% target. She also predicted the U.S. economy would suffer a notable degree of short-term damage from the impact of Hurricanes Irma, Harvey, and Maria. No insights were given regarding Yellen's future, whose term is due to end in February next year. She hasn't met with President Trump recently and has repeatedly declined to comment if she would be interested in serving a second term. Yoo Jun-hee, Arirang News.